Back in high school, he could throw that speedball by, make you look like a fool boy. Saw him the other night at this
Hey, we're working today. We're working.
He was walking out.
All right. That's good. At least we're starting off the third quarter on a better note. If you remember last week I was holding the phone. Well, anyway, my tech guy came in, hooked it back up, and here we are. My name is Scott Redler, Chief Strategic Officer at T3Live.com. Welcome to today's 6:30 Club. It's actually 6:31. It's July 5th. I hope everyone is waking up from their food coma. I had a great July 4th weekend and had some fun with their friends and family, ate some good food, had some Frosties, and watched some fireworks. And forgot a little bit about all of the recession talk and the worst first half since 1970. And put your mind in a better state. Let me say hello to some of my friends around the world before we get into it. What up, what up? Let me put also the chart up so you guys can see a little bit of what transpired in the past few weeks on the Spies, where I'm saying hello. What up, Caracas? Back from California. It's good to hear you. What's up, DeQuesta? Good morning from the gym. Love to see it. I was actually in Brick, New Jersey, staying with my friend Max on Mike and the Heschlers, and it was interesting. I haven't been in the gym in 2.5 years, and there's an LA Fitness there. I went for 3 days in a row because you know me, I'm a man of routine and process and routine. So it's kind of cool being in the gym again, But anyway, I also like having my home stuff. What up, Hampton, New York? How you feeling? What up? It's good to see you, my friend. We got Jorge in the house. Good to see you. Anybody? Got to start off. After July 4th, a little Bruce, right? I don't believe in Bruce's political talk, but I gotta love a lot of his old school music, and we all love the glory days. The thing is, don't get stuck in the glory days. You gotta appreciate the different time frames in your lives and what's happening now. You can look back and say, wow, that was cool, but look in front of you and say, hey, I'm happy what's happening now. What up, New York City Trade? We got Connecticut in the house. Good to see you, Barry. Say a few more hellos and then we'll get to it. Again, I was just talking to my friend Peter. I'm like, everyone's talking about all this recession talk, and I'm like, I remember in 2008, 2009, they actually almost canceled. I think they did cancel the Macy's fireworks in like 4 different spots. Now that was a recession. This time, they're just trying to, I feel like, suck out the inflated asset prices that got heavily bloated from the over-stimulus of the past decade that was topped off with, free money for everyone because they had to shut the world down with COVID. So right now, they're bringing out the excess, trying to bring in prices because inflation is, it's high, and it's here, and there's got to be something to be done about it. So how do you do that? They're doing what they're doing. They're trying to slow things down. The question is, do we get a soft landing, or are we going to come in a little hard? How long are we going to be? Are we in the 6th inning of this corrective cycle, the 7th inning, the 8th inning, the 4th inning? I hope not. So that's what we have to figure out. And a lot of the articles this weekend was talking about how, yes, it was the worst first half since 1970. So that's 50 years. So think about that. The worst first half in 50 years. So don't be so hard on yourself. If you're a trader and you're not on the high of your year, or if you're a little bit off, if you're an investor and you're looking at your statements like, wow, I'm down a little bit, or I can't believe how much I'm down. Worst first half in 50 years. So what do you do now? Do you close your eyes and say I'm not going to look, or do you face your financial situation and say, how can I find opportunities from all of these these sectors that have been battered and bruised and some crushed? And what you have to do is learn how to approach them and know your time frame on dealing with them. If you put in S&P flows every single month, make sure to stay the course. Okay, this will help your average cost over time, especially if, I feel old, but I'm not that old. I'm 49. So I could, where if you're like anywhere below 77 or 75 or 74, this is good for you. It'll help your average cost. If you have a cash account, you're like, oh, I want to put cash to work and feel like an asset manager. Well, I've already told you that I've done 2 tiers of my wife's blood in the street account. I waited patiently for 17% off the highs, and then again I did 23% off the highs, and I'm waiting patiently for the other 2. So half's in the S&P fund and half's in cash, And I'll get to that in a second. Where will I look to put the other half if it happens? I'm going to be patient, because if we do, make new lows on the year, which we might, you want to map out levels. But for this week, let's talk about today. Let's talk about this week. There's lots of talk about how obviously earnings season is not going to be good and guidance is not going to be great. The question is, what's priced in, what's not. And every time different stocks make lower lows on the year, like just say AMD did last week or NVIDIA did last week, it gives you some clues that it doesn't matter what the name is. If things can make lower lows, so can the market. That means the only bullish case is that maybe the bad news is priced in, and if it's not, that means we go lower. So how am I looking at this week? I am a little bit long, not a lot long, because on Friday, we were lower. I was ready to go on the boat. I'm like, you know what? Qs are down $2. Let me buy a little bit. I'll put a stop below the prior day's low, and I think I would be playing things to go red to green, and all of a sudden at 9:55. They were up $1.50, and I made decent money from the boat. So that's good. You can do that too. I try and give everyone ways to play the market, even if they're not a professional, if they have another job and not doing it and getting paid by it, but want to generate some cash flow based on them really liking to engage the market. So anyway, this is the SPYs. We'll do that first. Okay, 362. That's the June 17th low. You write down 362. That is the low of the year. Okay, a few things could happen. We could retest that and do a double bottom. We could break that, and then we figure out what the market wants to do. But that's probably not going to happen, I would think until at least maybe the jobs report on Friday, or maybe we get into the heart of earnings season, but we'll see. At this point, though, you have 362, and then you have 372. That's a little bit of a higher low. And then you had on Friday, what was this? 373.80. So let's put in 373.80. 373.80 is Friday's low. That's your point of reference. That is another small little higher low. If you remember, last time we had a little bit of a move. Remember this 7% move? That was a decent tradable move, and then all of a sudden everyone said, now we're going to rally, and then you had this outside day. So this basically negated, this active sequence that started as soon as we didn't go sideways to continue. It was a bearish engulfing candle that got me out of a lot of my risk. So if you got out of risk when we broke 387, you know what? On Friday, you said, hey, I could buy versus 372. So anyway, if you look real quickly what's happening, in Europe, you have the DAX down 1% almost. You have, red arrows. Europe's been a drag. The headlines everywhere is that the euro is at 20-year lows versus the dollar, which is not good for emerging markets. It's good for our buying power, but again, it's just not good for asset prices. So we'll see. This is what's dragging us down. Some people are like, Red Dog, at 11 o'clock last night, the futures were up 20. Why are they down 15 now? I'm like, I guess, anytime you get a new threshold, there are a lot of computers out there that trigger that, and this is one of them probably on why they're selling the futures. So we'll see what happens here. So let's go to the top. Let's put in the SPYs. Where are the SPYs right now? The SPYs are, we're down $1.80 at 379.61. So 379.61 is above 373. So at this point, you still kind of have a higher low, and resistance right now is what was the high here on Friday? The high was, I think, 381.70ish. So we'll see. Right now, can the SPYs be buyable versus this spot for today? Okay, that's my thoughts for today, because I trade for cash flow every day. And would that continue to show a little bit of support for this potential active sequence before not? But then, you could almost draw a line like this where you just have this descending trend line, and every time you get to it, it rejects the market. So you have a bit of room to get there. I'm just drawing that, kind of out of my, just off the cuff. As a technician, you can always draw your line. So if it wants to, hold here and go a little bit more, every time it's got to that line, the sellers have, taken they've shown their muscles and rejected price each time. Remember, this one looked like it might go, and then it failed. So you always have to be on your toes. So anyway, the Qs, very similar. The Qs, this is what I went with on Friday, and it worked. So you have 269, 275, 277. So the question is, will the Qs hold 277? And then, hey, maybe kind of build a little bit of a lower pivot here to get above. But either which way, after this little active sequence that got rejected and failed, was when it broke to below 291.29. So now we'll see, is this a little bit of a higher low? Maybe, just for today, we'll see. there's still probably some new funds that have to go to work, in the beginning of a new quarter, institutions, lots of different mutual funds, they get money and sometimes they're lazy and just start putting it to work in the beginning. So that gives you a little bit of buying pressure, but we'll see. So that simplifies it. What we'll get a clue. Some people are like, Red Dog, did you see the deliveries for Tesla? I'm like, I saw it, but you know what? I don't really care about it. I'm friggin' going out on the boat to F Cove and gonna hang out, drink some beers, and be with the family. But I read into it yesterday, and it's like wishy-washy. Some people think it could have been worse, and some people like, it wasn't great. So that means there's a little bit of a tug of war. So it'll tell us who wins. Price will tell us who wins, because right now Tesla has not been special. Tesla has not been powerful. Tesla has not, been the Tesla that, when I think Elon's a genius. Right now, Elon's a little wonky, has a little bit too much on his plate, and we'll see. So this will help, though, with sentiment for today. Why? Because if you look at this overall chart pattern here, this was the March rally. Remember that March rally? It was awesome. This is what made my first quarter. I did really well here because why? It broke a downtrend, was above the 821. They gave you a bull flag, continued all the way even into a shortable lower high. And then on earnings, they sold it, and then this was a great short for a lot of people. Since then, it's just been a two-way trade. So now what? Let me get this back up. Let's see where Tesla's right now. Does anyone want to tell me where Tesla's right now? Let's be a team right here. It's 642, so this way I don't have to get it up. But I'll do it anyway. Let's see who can get it first. Me or you guys? Anybody? Are everyone sleeping? 678. Right now, 680. You guys looking it up. You're a little behind. So it must have just went up. So anyway, Tesla's at 680. It's at 680. This low here is what is this? This low here is 666. Ooh. Anybody know what that means? Anyway, so Tesla's not doing much. But again, wasn't a great deliveries. They did say that their production for June was the most. So they're trying to say, okay, is this glass half full or glass half empty? Because sometimes when they buy bad news or weak news, it's half full. Sometimes it's making lower lows, it's half empty. So Tesla could give us at least some clues if they don't want it to fall apart. That's the whole active bullish thesis. Will it not fall apart? Can you buy versus lows? Because you definitely can't add on strength. I don't know if any of you out there have had a good trade in the past week or two, and then all of a sudden you think it's going to make a higher high, you add to it, and then it's not that kind of market right now. So anyway, what is Friday's high? Friday's high is 690. Okay, so this is the way I would look at Tesla today, and I'll probably trade it. So can it hold 667? I don't like to write 666. It's very scary. So I put 667. So it's off by a little bit. So the question is, if Tesla goes green and takes out 690, and I'll make that bigger right there, that would probably give a little bit of a boost to sentiment, maybe a little bit of a boost to the computers, because again, we were just up here. This was just at 756 last week before getting rejected and all of a sudden triggering some stops. So maybe there's a little spot here. If it goes from red to green, and if it was able to get above 690 and stay above it, maybe that would say, hey, you know what? The next day or so, tech can continue to try and hold in there. That's another new bullish, case. Can it just hold in there besides making lower lows? So we'll see. Again, I do think that there's also some Foxconn news out there. So it's at 680. So it's kind of in no man's land. We'll see. I would love for it to be down like 4 or 5 or around 930. All of a sudden, futures come in a little bit, doesn't come in. Buy it, let it go green, let it go up a few dollars, make a few $1,000s, and then see it hold, show relative strength, and then take out 690 and maybe bounce a little bit more. Would that be too much to ask for? Then I could buy some Qs, and the Qs can go right to green, and then all of a sudden, you have a great half-an-hour trade. I feel like, unfortunately, the highs of my day so many times in the past few months is by like 6. It is by 9:50 in the morning, and then from there, the sellers come back around 10 o'clock, and then they come back again around 11 o'clock, and then you have to either short the bounce or you say, hey, my day is done. So listen, that's another thing. Now's not the time to lose your discipline. Now's not the time, again, like I said before, to say screw it, because this is when you start to get frustrated if you didn't have a great second quarter and the action starts to get lethargic, meaning more people go on vacation. Some people get less interested in this area of the market. Most money managers already own this area of the market. So let's talk about that. So a lot of people like, where would you put, you know, your wife's blood in the street second tier in? So if we go to the S&P cash, okay, and you go to the weekly chart, okay, which shows you the levels and gives you the bigger picture. And let's get this out of the way, long term. So this is the long-term chart. Okay, if you remember, we based in the beginning of the year, I was the most bearish I've ever been. And everyone's like, Red Dog, you're permeable. I'm like, no, I'm not. You just started following me 5 years ago. I was on, if you Google Scott Redler, Financial Crisis 2008, I was on with Mark Haynes and Aaron Burnett every week or so saying the top's not in. I saved a lot of people a lot of pain. And then when we finally got to the end, became the best buying opportunity of the decade. And we're probably going to get something like that. I just don't know exactly where it's from. And I'm not gonna guess and say I know because I'm so smart, because I'm not that smart. I'm just prepared. So here is the low of the year, 36.33. I remember when we got down to here, I'm like, we're gonna bounce up and make a right shoulder. Like, what are you talking about? Well, you have a left shoulder ahead. You know, we're gonna bounce up. I didn't know we were gonna go all the way through here, make a right shoulder, then break the neckline, and then one of my targets was 38.10. So right around that 38.10 was where I put the first 5%, and I waited for not 5%, the first tier. I waited for 17% off highs. Then you had the 200-day. Okay, the 200 days right there. Okay, so 36.33. We happened to get us a week close that day, so I was able to put the other half. So now 50%'s in, 50%'s in cash. Okay, so I'm kind of in the back of my head. I'd really like to see lower lows over the next 3 months, like some kind of crazy capitulation action where I could, you know, put another tier or two of that account to work, maybe into 33.85. I'm really not that interested in 35.11. It's just too close to 36. So this 3,400 is where Wilson from Morgan Stanley says he thinks we can go. So if we get there, that's where I would be putting another tier to work. If we don't get there, I have half in, and then I have the 401k and the 529. And then if we do get here, then I have my 4 trading accounts, my active account, my swing account, my box account, and my options account that's been sitting in basically 90% cash this whole year. I've been sitting in so much cash just patiently because we're below the 8 and 21 day in the S&P. You know that. You read my ebook. If we're below the 8 and 21 day, you do not sit in portfolio approach. You just try and make money tactically, and you try and find active sequences like we found in March, or we tried 2 weeks ago that got rejected, and now we're trying to see. And I want to put the money to work. But you got to do it when the market's conducive for that. Okay, but the only way you're going to know when to do it is watching the action, being prepared, having a system, and hopefully letting me do a lot of the work for you, because I'm up at 4:45 in the morning. You don't have to be. You could be up a little bit later. I write a whole note that goes out by 8:30. You want to wake up at 8:15. At 8:30, you'll have a note, a video, and you know you'll get my summary of taking the funnel. I have macro notes. I see everything going on, and I go like this all the way down into a note and a video to go out to whoever wants to approach the market the same way as me, and then I trade all day long with the alpha team. So I do a lot more than just a 6:30 club. Is anyone sleeping? Are you guys still watching? Say hi. I want to see who's still engaged with me over here. At 6:49, I have about a minute or two left. Where is anybody? Let's see. Is anyone coming in? Hey, we got Teaching Joe. I knew you were there. How was your July 4th? By the way, he was an educator. Still is. And I think he's come to a bunch of my other Ultimate Access things. All right, we got Jack still in. We got the Squall. We got Todd. All right. So again, let's go back to just today. So that's the long-term chart of the S&P. So the question is, do we see 35.11? Do we see 33.85? Do we even see 32? I don't know. If we're in the 6th inning of this corrective phase, you know, I think we're right here, and then maybe the 9th inning could come somewhere around here. If we're in the 4th inning, then you guys are gonna have to be my psychologist. If we're in the 8th inning, which I don't think we're in, then maybe just a little bit more. But either which way, this is when the one trend broke. This is when this is when the market said, all right, you know, we're going into a different phase. Anyway. So we'll see what happens there. So for today, again, my thought is this. Here's a S&P cash. My thought is, can we hold in there for another day? Can some things go red to green? I would look at Tesla as a small sentiment gauge, because people are debating on, you know, was it the deliveries less than feared? You know, was it enough? You know, it's hard to have the poster child of growth talk about firing some individuals and then having bad numbers and still justifying the PE, but then they're like, well, it's still X amount off the highs, but it's not like ARC or XBI where it's like, 70% off the highs. It's only 40% or so off the highs. But anyway, so on the S&P cash, can we hold 37.38? Friday's low is 37.52, and try and build a little bit off of this. So does it go sideways here or not? You have Fed minutes, which are probably going to be really hawkish tomorrow. So we don't have that till tomorrow, and we'll see how it goes. I would take it slow. If you're a little hungover from the weekend, you don't need to be going all in. You have some things to gauge right now. If you look here, the Qs are down, only down $1.37. So I think that if we try and go green there. Apple might be something to look at. Why Apple? Because there was some news out of Foxconn. Let me see what's Apple doing this morning. That they actually, I think they upped their guidance. So Apple's only down 60 cents, and Apple has been viable the past few days. Yes, Apple has kind of held in there a few times. I've been thinking, how the hell are they going to have any kind of decent quarter, considering that anyone that didn't really have money got the free money from from COVID, and then went out and bought devices, and homes bought more laptops, and schools, and because virtual. So now there's really not as much, but who knows? Either which way, this is what? This is 135.66. So like this, I always change it, 135.66. Apple's only down 60 cents. So if Apple can go green and hang in there, this is when you had your move off the lows, which was Apple participated in that move, and then it broke this spot. So this bearish engulfing bar also got most people out of their risk, meaning hold and go sideways. So now we do have a little bit of a higher low. So we'll see. At this point, I think if you don't have to be in 100 things to make money. You could maybe see if the Qs go red to green. Watch see what kind of signal you get from Tesla. If Apple, if all of a sudden they start to sell Tesla and Apple, it's feels like a wet blanket, then that today's just going to be a lot of what's been going on for the past month or so. Then obviously oil is really important. That's more macro. If you look here, we did look like if oil was ready to get into maybe more of a corrective phase. This was your red dog reversal sell right there on the USO. That helped sentiment. Then you had a bounce into another red dog reversal lower high sell. So I would think for those to really say, hey, maybe energy can go lower or oil can go lower, you got to really start breaking this area of this big wedge pattern. What's a wedge pattern? A wedge pattern is a digestion consolidation pattern after a huge move. Oil's had a huge move. So what happens is you consolidate to figure out what's next. So right now it's in consolidation mode and starts getting below 79.83. Maybe another bullish thesis for the fourth quarter is all of a sudden the Fed did their job. We're going to have slowdown. Demand's going to come in. Inflation's going to peak. You'll start hearing peak inflation talk, and then that could get the Fed to maybe go to a more balanced approach. But that's not going to happen in the July meeting. The July meeting, they're most likely going to go 75 basis points, and then talk about maybe September. But it also depends where the market is. Is the market going to be at new lows heading into the Fed meeting in the next few weeks, or are we going to be in some kind of oversold bear market bounce that gives them a little bit more confidence because things aren't as drastic, and then they have to continue to do what they're doing. So at this point, let's go day by day, but then also think of the opportunities that are going to be in front of us in the next 3 to 6 months, because there's going to be many of them. And the market's fluid, so you have to stay fluid. I appreciate you. Thanks for tuning in, and I'll post up a bunch of charts in the next few hours after I catch up with the Alpha team, see how they're doing after July 4th, and start getting right, going with my team for the note. I appreciate you. Thanks for tuning in. It's good to have the system back up. Michael Haraka, thank you for coming, making the trip to the office, because I'm here by myself, and I am not a tech guy. I am definitely a 49-year-old guy that has his process, his routine. I can remember numbers. There are a lot of things I'm good at. What I'm not good at is maybe like my wife is so funny. She's like, you don't like to follow directions. I'm like, that's not my strength. I can't go to Home Depot, buy a huge barbecue, and I'm not going to spend 2 hours putting the barbecue together. I'd rather pay someone, and then have the 2 hours to myself. Anyway, we all work hard to figure out how we want to spend our money. At this point, I'm glad this is back up, and we'll see if it works again tomorrow. Good luck today, guys. Just stay the course and do what you need to do to stay sane, so this way you don't get frustrated, overtrade, and lose money when you don't need to, and you're prepared for when the